Andrea Heng, and this is Money Talks Explains. This is where we have a burning question and we find an expert to break it all down for you. So you would have read by now the changes to the government's CareShield Life insurance scheme. For those of you who aren't really sure what CareShield Life is, it's essentially our national disability insurance scheme. Now, what are the changes exactly? How are they going to affect the way you plan for your future? What's it mean for your premiums and payouts? To answer all these questions and more, we have with us Alex Lee, President of the Singapore Actuarial Society.
Hello.
Good of you to join us today. Really important questions that we want to ask. But before we get into the changes specifically, can you perhaps briefly explain to us the purpose of CareShield Life? And I understand it's mandatory for those born in 1980 and younger, right? That's the first.
Yes. So CareShield Life aims to offer financial protection against long-term care costs. And the payout would start when someone is not able to perform any 3 out of the 6 activities of daily living, which includes dressing, feeding, toileting, transfer in and out of bed or in and out of wheelchair, walking, and also washing themselves.
Okay.
Right. And the need for long-term care can be triggered by many events. For example, it could be due to something that is like an accident or stroke, things that happen suddenly, or it could be due to deterioration of some chronic illnesses like diabetes. It could also be frailty coming from very severe cancer or cognitive impairment like dementia.
So I note earlier that it is applicable and compulsory for those born in the year 1980 and younger.
Correct.
What about those that were born earlier than that? What do they have?
So for those who are born earlier, they would have been covered by the Elder Shield 300 or Elder Shield 400, which started 2 decades ago.
Okay.
Right. It's on an opt-out basis. So some people may feel that it's not worthwhile to buy that product. They might have opted out. Otherwise, if you did not do anything, you would be in.
Okay. Interesting. Now, let's get into the changes. The first one that stuck out to me was the monthly payouts. They are going to increase from 2% to 4% every year, starting from $689 next year. What's the primary driving force behind these increased payouts?
I think whether someone is being cared for in nursing homes or being cared for in their own home, the cost of care has been increasing at a much higher rate than general inflation and certainly higher than the 2% per annum that is priced into the existing CareShield Life. And the drivers of this there are many. Some key ones include there's a global shortage in professionals who are trained in providing long-term care.
So manpower,
and there are also more medical innovations, which also tends to be more costly. And there are also generic stuff like supply chain problem and things like that.
Okay. So that explains why the monthly payouts are increasing. And obviously the higher monthly payouts have to come from somewhere.
Correct.
And that somewhere is our own pocket. So our premiums are going to be higher as well. They're going to be growing for the next 5 years. Can you run us through the numbers? Help us make sense of what's happening over the next 5 years?
Correct. Actually, the premium increase comes in 2 steps.
Okay.
First, there's a one-off increase. And then after that, increasing at 4% per annum, which is tracking the increase in the benefit payout.
Right. Okay. That's much, much clearer to me now. Okay. So here's a question that I have. When I first read all the articles, all the details about the changes to CareShield Life, there were phrases like transitional support.
Correct.
Means tested reduction of XX% from base premiums. This is just all jargon to me, and I'm sure it's not jargon to you. So maybe could you clarify, walk us through what all of this means and how it affects us individually?
So I think let me start with transitional support. Right. Just now I mentioned that on average, the policyholders would experience a one-step jump going from this year to the next year. And not everyone would have budgeted for such a high increase in long-term care insurance expenses. So to buffer that increase, so government is providing 570 million in terms of transitional premium support so that the trajectory of increase is not so sudden.
So it's cushioning the blow for us when we are paying the new premiums. Okay. And that means also, based on what you're saying, the increase will feel phased and progressive. And it just doesn't hit our pockets as hard as it should.
And also is available to everyone. Right. So in contrast, the additional premium support is based on what is someone's household income, where do they stay, and things like that. And only those who are more needy, who are lacking, let's say, MediSave balances or lacking family support, they will be entitled to a higher subsidy.
Okay. And what about this phrase, means-tested reduction from base premiums?
So as the name implies, if you have more means, which means if you have more money, then you don't get that subsidy. So the assessment is based on per capita household income.
Right.
Those who are of lower per capita household income will get a certain percent of their premium waived. And if that premium subsidy is still not sufficient, there's still additional premium support. Right. That is on an invitation basis for those who have really very low MediSave and very limited family support. And that will be on a by invitation basis from the government.
So how does it change if I'm in my 70s now? I mean, is there a difference in the premiums that I pay and the payouts that I get?
So by default, the CareShield Life plan is one where you pay your premium until age 67.
Right.
So for the mandatory cohort who were born in 1980 onwards, they haven't reached that yet. Right. So that's why when you talk about people who are currently age 70, they belong to those that have the right to opt into CareShield Life if they want to. But the rules for that opt-in is also changing.
Yeah, tell me more.
So until end of this year, right, those who cannot do only one or two activities of daily living, they are still eligible to opt into CareShield Life. Those who are already not able to do 3 out of 6, then they cannot opt in anymore.
Right.
But going forward, from 2026 onwards, for someone who is age 70, they can only opt into CareShield Life if they can do all 6 activities of daily living.
I see.
So they're tightening the opt-in requirement.
I see.
And it's not necessarily a bad thing because there will be less people who are of high propensity to claim joining in the last minute. So it's fairer to those who are currently subscribed to the scheme, right? So that's why together with this tightening of the opt-in controls, you also can see that the premiums for the older cohorts actually reduce with this change.
Understood. So that means the pool for the payouts, for the potential payouts to the younger people or the people that were meant to be part of this CareShield Life program are fair. There's enough to go around basically, right? To the right people. Okay. What happens if someone genuinely cannot afford their premiums? Because I know that, yes, it's mandatory. Yes, we pay it in a very automated way. We don't necessarily pay cash for it. But there are some cases, some people who really won't be able to afford it at all. Will they lose their coverage then?
So for those who are on the mandatory cover, that means they are born in 1980 and after, that's where the means-tested premium support comes in.
I see.
So they won't lose their cover.
Right. They will always be covered no matter what, right? Okay, that's comforting actually. So let's take a look at the criteria for making a claim. Being unable to perform at least 3 out of 6 daily living activities, that remains unchanged, as you said.
Correct.
For those who want more extensive coverage or even a lower claim threshold, what might their options be?
They can always go to the private insurers who offer CareShield Life supplement and buy those additional coverage.
Okay.
Right. At the moment, there are 3 insurers offering that. Yeah.
Okay. What's the difference between, this mandatory CareShield Life insurance scheme and a private TPD, Total Permanent Disability insurance scheme? I mean, I already have that. So, I mean, should I get rid of my TPD just because I already have CareShield Life?
I think TPD and CareShield Life, which is a long-term care insurance, serve a slightly different purpose.
Okay.
So TPD, as the name implies, the disability has to be total, permanent, and irreversible.
Okay.
Right? Where the long-term care payout actually can come in earlier. So even when you only cannot do 3 out of 6 activities of daily living, and sometimes that condition may be reversible, claim payout can already start. Yes.
Okay.
So, and also because most of the time your TPD coverage pays you a lump sum and it also accelerates the death benefit that you have bought. You may want to ask yourself, do you really want to take that lump sum out early or do you actually want to leave it later as a bequest to your loved?
I see. Okay. So you talked about how for TPD insurance schemes, it has the disabilities have to be irreversible.
Correct.
For CareShield Life, does that mean if it's reversible, the payouts stop? Like if I go for rehab for a certain body part that I can regain strength in and I'm mobile again, does that mean my payouts stop?
The payout will stop, but it can restart again if you relapse into that disability.
Okay, so it's actually pretty flexible.
Correct.
Right, okay. So the enhanced payouts and premiums are going to be reviewed after the year 2030, indeed 5 years from now. What factors do you anticipate the CareShield Life Council to consider in this next review? I mean, considering number one, of course, that healthcare costs are only going to go up from here.
Correct. So I think there are a few factors. First is, as what you mentioned, if they were to adjust the pace of payout increase, let's say from 4 to an even higher number, then of course premium has to increase. Other key drivers for the premium includes what's the incidence rate or how frequently people enter into disability.
I see.
Right. Next is once people become disabled, how long do they remain in their state? Right. And lastly, because for CareShield Life, you are only paying premium up to age 67, but the coverage is for life, which means what goes behind the scene is that they take the premium, they invest, hopefully generate enough investment return so as to pay for the benefits in the older years.
Right. So whatever you pay up till 67 is invested to grow so that there'll be enough to spread to the end of your days.
Yeah, in the special government securities. So if the investment return changes, therefore the premium rate will also have to change.
Okay, very interesting stuff. The ins and outs of what the CareShield Life Council might consider. Okay, just a final question here. According to the MOH data, about half of CareShield Life claimants are in their 30s and 40s. And this especially was surprising to me. I am basically imagining my friends, my cousins, born in the same era as me, having disabilities. And I think the number was just over 1,800 people, claimants so far. What does this statistic tell you about the importance of disability insurance, especially for younger individuals? Because we don't typically associate disability as a result of illness at such a young age.
So there are a few things to look at here. First is disability do hit young people, right? But I think the kind of events that trigger such a disability is a bit different from what triggers disability in the old ages, right? For the younger people who become disabled, those are generally not age-related episodes. For example, they get into accidents, right? It could be congenital or developmental issues not related to age. It could be a rare disease, or it could be, let's say, mental disorder related, like schizophrenia and whatnot, right? So the causes of that disability can differ quite a lot. And also remember, for CareShield Life, is compulsory for everyone that is born after 1980, including those who had pre-existing disabilities.
Right.
So some of those, let's say around 900 over people who are currently claiming, who are below age 52, which is the median age of the claimants, those may already be disabled at the time of entry. So that may have increased the number of claimants a bit also.
I see. That's an interesting statistic. I really need to get on reviewing what my insurance plans are and see where CareShield Life fits into all of this. Alex, this has been really helpful. Thank you so much for sitting in this chair with me. Do you need something explained? Well, Money Talks is here for you. All you got to do is write into us at cnapodcasts@mediacorp.com.sg. Money Talks, as always, is available on Apple Podcasts, Spotify, YouTube, and Me Listen. Do leave us a rating while you're there, okay? Credits to the team as well. Tiffany Ang, Net Fetavero, Junaini Johari, Joanne Chan, Hanida Amin, Saye Wint. This has been Money Talks Explains. I'm Andrea Heng.